a new COVID variant, and a 2-year bull market. But what should we expect the stock market to be in 2022? Hey, how's it going, guys? My name is Louis Olivier, and welcome back to the North Investor, where we're all about personal finance on our path to financial freedom. So guys, I am back stronger than ever. I know it's been a big 3 months since I haven't made any new videos, and I'm really sorry. It's because I took some time off just to focus on myself, and most importantly to be able to focus on my studies, because as some of you might know, I am currently finishing my financial master, and I was really focused on to be able to really succeed well, because I also have my CFA exam level 1 that is coming in May 2022. So I might do some video about it in the future on this channel. I'm gonna try to make more and more videos now that I will have more time. So I'm gonna try to be able to upload weekly, so 1 video per week on different financial subject. So it's gonna start very well today with a little episode where I'm gonna check out at the global situation on the stock market at the moment, and what is my expectation for the stock market in 2022. And I'll be taking a look at many different financial factors and situations that will impact obviously the stock market, but also stay tuned until the end of the video, where I will share with you some interesting financial ratio and some technical analysis about the market, where we will go more in detail about it. And obviously, guys, I don't have any time machine, so I cannot predict the future. So it's all based on some expectation that I do personally have. And it's always really important when you do, for example, some investment on your own, that you verify your own investment before to do it. Now, when we look at the S&P 500, which is an index that lists the 500 biggest companies in terms of market cap in the United States, we clearly see that the 2021 year has been a pretty bullish year. And on the 5-year chart, we can see that since the crash of 2020 in March, the cycle of the market in general has been pretty bullish, and it has gained more than 1,300 points compared to where it was just before the crash. And what is really important to keep in mind is that in finance, everything that goes up will eventually goes down as well, and it cannot always go up without having any correction, because we are seeing it on, for example, the max chart. We see that right now the cycle is really extending, it's overextending right now if we use the S&P 500. Now, when we look at the VIX, which represent the volatility of the market, or if you prefer, the risk of the market, we can clearly see that right now we have just faced some peak in December of volatility. Obviously, the peak was not as much as during the pandemic, where we hit some really pretty much all-time high in terms of volatility and risk. Right now, we faced some risk at the beginning of December coming from the new variant of the COVID, the Omicron virus. So that's a signal that has been sent to the investor, obviously. So there is a little bit more risk. However, right now, if we look in the general chart, we can see that we are pretty much around the average of 20 points for the volatility. But still, we are really in a period where there are a lot of information that's going to be interesting and important to really understand in general the global situation, and not only the graph. So now we'll take a look at what are the Omicron news and what is going to be its impact on the market for 2022. So for the Omicron variant, what is really important to understand is, as we saw earlier, the impact of this new variant was pretty big at the beginning of December. It was pretty negative, as we saw also on the VIX. Like, there was a lot of risk that was added at that moment, because people didn't know about the variant and they were not necessarily well prepared. But when we compare it, for example, with March 2020, when people didn't even know we were going into a pandemic and that everything was going to close
closed because of lockdown and stuff like that. So at that time, the market react even worsely. But now the thing is that people are more prepared. However, we will see in this article, it's summarizing it pretty well. What we can see is that this variant is concerning because not because of its symptoms and stuff like that and its gravity, because it is less severe. Even though if we are still at the beginning of this new threat, it is supposed to be less severe. But the problem is that it's supposed to be more contagious than, for example, the Delta variant. So I'm not a doctor. I'm not going to go too much in detail about that, but what you need to understand to analyze the stock market is to see its impact beyond just, oh, it's contagious and or it's harmful for people. But you need to understand that it will, for example, close school. It could potentially close shop, and workers could stay home and could not go to the restaurant, so they will have more money or whatever, and they might buy more on Amazon, for example. So there's a lot of link to do with it, depending on how it evolves in the time, obviously. But it's going to be really an interesting factor to look for in the early of 2022. Also, we can see that here that many people, even if it's at low danger rate, could be infected, but the problem is that it might overwhelm the health system and create many different type of challenges. And the other big news from the end of 2021 is the re-election of Jerome Powell as the chief of the Fed, or the Federal Reserve. So it was the President Biden that decided to keep Jerome Powell as the actual chief from the Fed. And recently, this week on Wednesday, he decided and said that the inflation was the number one enemy for the US economic expansion. So it shows, first of all, I will explain to you what is the difference between the dovish and the hawkish, because these are the two possible approach that you can have, because the Fed basically is the entity that will manage the monetary policy. So the monetary policy is the way to, for example, decide if you want to print more money, if you want to focus more on job creation, if you want to increase or decrease the inflation rate or the general rate that will impact the inflation rate. So to make it simple, I have a little image here. Here in this case, Jerome Powell is actually hawkish, which means that he will focus more on a contractionary policy, which means that he will want to increase the rates to basically diminish the inflation. And on the opposition, you have the potential dovish approach, which will make that the people that will have this approach will decrease the interest rate to try to have an expansionary policy to make and to create jobs and stuff like that. But in this case, Mr. Powell will really focus on the inflation simply. So he said that the enemy of the American economic was the inflation, and as we saw, I think the inflation of the American is about like 12%, around that corner. I think we will see later what is the actual inflation for the Canadian, which is way lower than that, because the policy is a little bit different. So here in Canada, the policy interest rate is actually fixed to 0.25% since the beginning of the pandemic in March 2020. And the policy interest rate is actually decided by the entities. So the Bank of Canada or the Fed, and in this case it's super low. But what is predicted to happen in the future, so in the next month, probably in the beginning of 2022, it is that the people that are the chief, I don't remember who is the chief of the Bank of Canada, but he will decide, for example, to increase the rate potentially during the beginning of 2022. This is what is expected. So basically, just to explain to you guys what is the impact of this rate, it is super impactful because it is the rate that will decide, for example, and that will lead the inflation, obviously, but also, for example, the mortgage loan, the car loans, etc., etc., etc. So it is like the main rate, and the objective of the two entities is to really manage well this rate. So as we saw with those two big events that I personally think will have a huge impact on the beginning of the year of 2022 at least, and maybe during all the years, it's going to be interesting to see what is and how does the market will react to it. But just before to end the video, I wanted to share with you what is the S&P 500 P ratio. For those who don't remember, the P ratio is the price per earning, to see if a stock is over or undervalued. So if we compare right now, the P ratio is about 29 around the market at the moment. And if we compare it only with the modern area, okay, we are not going to take in consideration all the early 20th century, because it's not necessarily the same condition and the same way to invest. So we'll take only about like the 2000, the 21st century. We can see that right now the P ratio of the S&P is not too much, I'd say, overvalued. It's not undervalued as well, because we saw here that just before the crash of 2008 and like before also the pandemic, the PE was lower, but still we saw that there was a readjustment since, for example, the beginning of the pandemic. But like since the big upside that there was after the pandemic, but we see that there is also like we don't know where it's gonna go, like if it's gonna go up or down, but potentially here you see that there is also, in my personal point of view, some, for example, small cap companies that are way undervalued at the moment, that are really like some interesting companies to take a look at. I will do videos in the future about that, but it's interesting to see for you guys to go check out some stocks, because there is stock at the moment that are way overvalued, but I think that there is still some possibility for growth to come, maybe in 2022 or maybe in 2023, depending on the situation. But personally, I'd be careful to always keep some liquidity, and obviously I'm not a financial advisor, but that's what I am doing personally. I'm always trying to keep some liquidity. For example, if there is a big crash or there is like a big correction, so I can buy. It's super important to keep liquidity and to be enough diversified. So I will make more videos about that in the near future, so you can understand my point of view on that.
So guys, I really hope that you liked that video. Let me know in the comment section what are your personal objectives in terms of investment for 2022. And for everyone that is new on the channel, I highly invite you to come and join the North family by subscribing to the channel. And also, if you want to understand and learn how you can invest in the stock market, I invite you to come and check out my video on how to analyze a stock that is going to be right over here, and I will see you there.